Hi everyone, welcome to Strike. So as you all can see on my screen, the Nifty index has finally broken above its all-time high of 22794 and has closed on a fresh high, and today's closing it as is at 22,967.65. So this is an all-time high closing, and while it has happened, I was looking for which sectors can be good that can outperform in the coming days, and we can play out the move in those sectors. So I was simply scanning for new buy signals in the Rohit scanner, in which I saw only two or three indices popping up for today. So one was the banks, both the Nifty bank and the private bank, and the other one was FMCG. Now, why I'm looking at FMCG particularly was because even the weekly buy came, I think, a couple of weeks ago on this candle, and it came as a proper cycle from below zero. While in Bank Nifty, it is still continuing in the similar cycle. So chart wise, FMCG chart looks clearer to me. So I'm just trying to look into the Nifty FMCG today to check if it can outperform in the coming days. So with that, let's go to Nifty FMCG's section. So on the first overview page, what you can look at is the performance versus Nifty. So if you look at 1 year performance, it is underperforming the Nifty. Similarly, in year to date and 6 months also, it is underperforming the Nifty. But when I look at it from 3 months point of view, then it has outperformed Nifty. Similarly, on a 1 month basis also, it has outperformed Nifty, and a weekly basis also. So it is, maybe it's in a beginning stage of starting to outperform Nifty. So now with that, also let's look at the seasonality. So seasonality tells us that May, June, July, all are green months on an average. So you can see average return of May is 3.3, June is 1.3, and July is 2.5. And largely you can see only green cells are there during this quarter. So May, as we know, today is what, 23rd. So most of the month is already passed. So next June and July we can focus on. So seasonality and outperformance wise, the sector looks good. Now coming to the charts, I'm going to the Rohit setup directly on the weekly charts. So what I can see here is it has very clean cycles on the weekly chart. As you can see, one cycle is this, again this is a part of one cycle, again, and this, and now it is starting one more cycle on the weekly chart. So all previous cycles, let's see how much they have moved it. So I'm just approximately drawing price and date range for these each of the cycles. So what we can see is 20-25% move has been fairly common in one cycle, and if we project the same from here, so if I even project 20%, then the level comes close to 62,600, and currently the index is at 55,899. So it is still a way to go on the weekly chart. So let me clear all these drawings. So the weekly charts tells us that a new cycle is beginning, and if you look at the daily, in daily also it has crossed over to the bullish side in today's session only, while it has not came back to zero and completed a full cycle, but it's a buy signal nevertheless. So whatever we are discussing is neither a buying advice or a trading advice. So I'm just simply sharing an outlook on the sector. On the valuation front, so I was looking at both the PE as well as the price to book on a 3 year basis, since we are looking at a 2 to 3 month kind of view. So on the PE, it's on the higher side on a 3 year basis, but on the price to book, then it is quite away from its higher peaks. It's just recently reached the median value and trying to go up from there. So on the price to book terms, it is not as high as it looks on the PE. So on the PE also, let's check a longer term chart. Yeah, so PE definitely looks on the higher side, but nevertheless, the momentum setup is looking good. So the next screen that we will be looking at is the ratio chart for the Nifty FMCG versus Nifty 50. So what you can see here is it's the lower end of the range here. From where you have seen outperformance cycles start for the Nifty FMCG like this. So this is a support line for the ratio itself from where fresh outperformance cycles have started in the past. So very recently it has came back and tested the same levels on the downside and started to bounce off from there. So if it is to continue this outperformance cycle on the upside, we can watch this 2.6 2.65 around levels as a resistance. So it is expected to outperform till it reaches this particular line on the ratio chart. So that was it, a quick view into the FMCG index along with the help of strike tools. So stay tuned for further videos like this on our channel. Thank you.